Welcome to this week's Swyftx Squawk with me, Pav, lead market analyst here at Swyftx. And we've had a pretty bumper last 24 hours with the markets starting to flash a little bit of green on some positive news. And that's what we're going to cover here today. As we can see, Bitcoin, Ethereum, and also the rest of the top 10 showing some sign of life in the green today. Bitcoin, namely, up 5.5% in the last 7 days. But what's really taken the main story overnight has been the SEC dropping their lawsuit against Ripple Labs. XRP, notably 4 years ago, had started its legal battle with the SEC on the basis that they had issued securities to retail and institutional clients. Now it does have this particular item squared away and put to bed. Particularly when it comes to the next potential fundamental catalyst for the asset, we do have the exchange-traded funds filings, which are currently sitting with 9 different issuers. So again, definitely leading the charge in terms of the quantity of products that may be opened as a result of this clarity that is come from the SEC. But there's also been additional good news in the market as well. It hasn't really quite stopped just with XRP. While it wasn't as good as many had wished, we had the interest rate meeting come out of the US, or the policymakers coming together essentially to, while hold interest rates steady, they did commit to some form of easing. So specifically balance sheet rundowns, which is one of the tightening measures that have been put in place since the COVID era, where we had seen inflation run rampant. And one of the solutions was to basically remove the money in circulation through one mechanism, which is balance sheet rundown. They had said that they are aware of the tightening situation that is occurring in the economy right now. Identifying that is obviously a pretty key piece of the puzzle when trying to establish when this particular administration will move from a more tightening regime, which we have seen since 2022, to a more supportive and growth-centric policy direction. And while this isn't moving to what we would call QE or quantitative easing, it is one step down from the tightening that we have seen, acknowledging that while this isn't an overall clear sign for blue skies when it comes to more money being made available to the economy, it is a sign that they are going to be taking less out, which again has proved to be positive from a liquidity perspective. And speaking of interest rates, while we had discussed that interest rates obviously hadn't shifted since the last meeting, the chart of the week, we wanted to dive into the participants of the committee, or the FOMC, who creates policy. This is a chart showing the current assessment by committee members on where the final interest rate will be in subsequent years. So we can see for 2025, it is still quite a bit way to go, potentially up to 2 to 3 rate drops still to come by the end of the year. So as we haven't seen a rate drop this time round, the general consensus and the market direction is that there will be one coming, and it's just a matter of time. And this has proven to be a pretty significant element for the markets in the past, as interest rates, while they don't alone move markets or influence markets directly, they have paved the way for liquidity or cash to be more readily available in economies. And we can see, again, like this blue line tracks M2, which is the availability of cash as an asset or liquidity. In the past, it has been correlated to Bitcoin's price movements in the past. So again, this is something that, while we don't know when it's going to happen, when the time comes, historically it has been quite positive for Bitcoin and its price performance. But that's it from us here today. We'll be back in touch next week to chat further about what's making news in crypto. Thanks very much.